All right, good morning to everyone. So January 4th here. We're going to run through the Income Navigator portfolio briefly with you. I'm going to run through some market overview with you as well. I give you my takes on some things, which you can take that as you want. And then we'll take a look at some of the trades and strategies that we have on. And look at a few stocks as well that might be setting up for either an up or down move, giving you some opportunities to do some things in your accounts as well. All right, so I'm going to share my screen and let's just first dive into Tastyworks here. And I just want to run through briefly just an overview of the markets. Let's take a quick look at the rut, and I'm going to explain some of my charts quite a bit different than other people's potentially. I'm really simple. I don't have a lot of complex stuff here going on, but it's all, to me, it's all about price and price movement and some of the underlyings. I just want to give myself the best chance to be successful. Normally, when on most of the trades, I take and that we do here in the Income Navigator is these are higher probability trades in many situations. So I expect to win 70% of the time, which is not necessarily the way trading always goes. I think if you can win 50% of the time and you win more than you lose with a good 3-to-1 or whatever ratio you choose to use, every time you win 3 times. Every time you lose once. And if you can be right 50% of the time, you're in pretty good shape. That's too much work and effort for me. So I'm a premium trader. So we do take a little bit more higher probability trades. I expect to be right about 70% of the time, 65% of the time. If that holds up, we're in pretty good shape. And as you know from trading plan and stuff that I've shared as well too, my goal is always 3%, 4% a month, something in that range. If I hit 35% a year returns on a consistent basis, I'm a pretty happy camper. We had a good year last year, but the market was up fantastic. So if you did not have a good year last year, you had to work really hard to be bad at it, since the market has been on a tear. And when you're getting the S&P up 27 and some percent, you could have bought S&P and just sat there for the year. And made good money. So lots of great stuff last year. I think this year is going to be a little bit more challenging, but we're off to a good start here in January, which we expect, the last couple of days of the year and beginning of January to usually be decent. And then we'll see where the market goes from here. So take a quick look at the rut. We're going to look at a 1-year chart right here, just briefly. Russell, you can see it's been in this tight range all the way back to, January. So for a full year, Russell's been in this range. Yeah, we had a little breakout here. We got excited for a moment and then back into the channel it goes, and it's dead center of that channel. Things are pretty flat here. So when I want to take a look and get an idea of potential market direction for me, as we go, this is my first screen that I'm jumping on, and my first indicator here is just the MACD, simple MACD, nothing complex here. And I look to see where are we changing momentum. So you can see as we started to sell off here, once it changed from this bright red to the dark red, you start to see reversal here. That's a good sign. But it's not a buy sign, but it's a good reversal sign. And then once we start to really get close to the 0 line, then okay, that's where you have some opportunity, I think, to go long. So that's really the crux of it. I'm pretty much done. I think we can wrap up here. 5 minutes in. That's it. So to me, this is a great opportunity to look to get long. I do look at the RSI and the stochastics here. I want them both to be rising. I want them both to be 50 or higher. You can see RSI today is at 66 and stochastics is at 89. So these have both risen pretty well. I'm not saying today is a good day to get in. I'm just saying this was the opportunity here. And then I also look at the Squeeze Pro indicator, And as the TTM squeeze, once that same thing, once that momentum, and it's usually lags the MACD, once that indicator starts to reverse its momentum, okay, you got an opportunity. When a squeeze fires, which is typically these green dots here, and this is nothing new if you're familiar with squeeze, and I know Anisha's done plenty on this and other people. But the way John Carter's covered it is really once a squeeze gets about 8 bars in, that's about the average before it starts to fizzle a bit. Now, fizzling a bit doesn't mean it's going to go down or reverse. It just means that the main move might be starting to end, and you start to consider you're tightening your stops or whatever you're doing here. So you can see that this reversed as well. And once we got back to the red dots where we entered back into the squeeze again, as the Bollinger Bands as well. I don't have the Keltner on here, but as these Bollinger Bands get tighter, you can just visually see what's happening. And then now look, we started to break out again. Today we've got a green dot, but might be a nice squeeze breakout here. We might have a couple more good days on this, and we might have a month of good days. Who knows? Doesn't matter to me. All that matters to me is, hey, this was an opportunity here to look to enter something and put something on. And we continue to remain in this channel pretty well. And until something changes on that end, I'll be sticking with that thesis that, hey, we're just going to keep bouncing around in this channel. If we get back up here somewhere around this 2360 mark on Russell, then we'll look to see, are things getting long in the tooth? Are we just going to settle back down in here? Really a great strangle type trade to have on all year long. Would have been just a perfect strangle opportunity here. I'm going to do a couple other quick charts with you just to give you some sense of what I'm looking at. This is a chart using the same 2 indicators at the bottom. I'm really not paying attention to them here. They're really not critical here. Super trend indicator. I like this indicator just as a backup for my thesis a little bit. When it's green, I'm usually a buy. When it's red, we're usually a sell or not a buy. Either one, again, I don't take this indicator and every time it turns green, am I buying here at these different, or selling at these levels? Although you can see it's been fairly accurate for some good size moves in here. It just gives me an idea of, if I'm bullish on something, I want this to be green. That's about it. That's all I'm checking on that. This chart, though, to me does a little bit more and gets me a little bit more excited on some particular moves. There's a lot going on in this chart, and I just want to jump into it briefly. And if this is boring you, I apologize, but just giving you a little insight onto my crazy world of what I'm looking at, which is a lot different than many other people. But what you'll see up on here is a couple different things. So you will see these green and red wider bands here. These are MOBO bands. I'm not as big of a trader on the MOBO bands, per se, but again, it's an indicator that, hey, if we're red, probably not in a bullish mode, and I'm not really interested potentially in getting involved yet. What I'm more interested in on this chart is the PSAR indicator. And when you look at the PSAR, it's these white dots that are on here. And what the PSAR stands for is the parabolic SAR indicator. And it really gives you an idea of direction, trend, and how to use it. And it's really a reversal opportunity. So you can see when these trends first start, so you can see here, and there's a couple things on this chart that all match up. But you can see here on November 10th, you got the indicator first dot of a PSAR reversal, which means that's a good opportunity potentially that either we're topped out, we may reverse, we may go lower, we may go for 2 days, we may go for a month, who knows? But that's my first indicator. Now, what you see when you look at this is the first time this indicator happens, it's pretty far from the candle. Okay, and you can see how far these dots are from these candles. The closer the dots, and as this thing accelerates, these dots can remain far away. However, at some point, the dot catches up to the candle. When the dot touches the candle, typically the next day, it's a reversal. So you can really get an idea of when it's going to reverse. Now, is the reversal a buy? Maybe. You got to look at all the other indicators and all the other things. So I try to take a couple things into account. So the PSAR is one piece to this, giving me an idea of, hey, we could be reversing. Might be something to take a look at on here. And then down below, the stochastic momentum indicator. This is one of my favorite indicators. This is a fantastic day trading indicator when used on a 5 and 15-minute time frame that tells you when you are oversold under the 40 or overbought over the 40 and you reverse up through those lines. It can be a really great day trading assisting indicator. Doesn't mean I would day trade it all the time and use it, but if I am doing something short term, it is something I will look at, especially if the 15-minute is in this up mode like you see here, and the 5-minute is coming down and starts to reverse. As soon as the 5-minute catches to where the 15 is already in the uptrend, that's a really good opportunity potentially. Anyway, I'm looking at it on a daily basis, and all I care about here for me are extremes. When this thing gets way below, it can stay below for a while, but as soon as it starts to pop up here, it's an opportunity to get potentially be longer in this trade. Now, again, this can stay for quite a while, so you would have gotten long maybe here on December 7th on RUT, and you'd still be in it today. Now you can see that it's gone from oversold to overbought, and now it's starting to make its cross here. And if it crosses below this 40, I'm going to start to get a little concerned about any continuation of the uptrend. You can see when it gets up there and starts to make that turn, we change. Gets up there, starts to make that turn, we change. Gets up there, starts to make that turn, we change. Now, does that mean it's only going down here? No, you can see this one went completely sideways, never got to overbought. So it's not a perfect indicator. It just helps me make some decisions on what I'm doing. And then the last one here, which is a unique indicator that I don't know that a lot of people use it for anything here, but it's the commodity channel index. And what I like about the commodity channel index is you can see I have, a 100 plus 100 minus 100. It's this red and green line down here. Oversold, overbought. What I care about is if this thing gets to the 200 mark, starts to reverse the other way, breaks the 100, that is a really good indicator of something overbought, oversold, making a reversal. So you can see right here, again, everything converged. It was already a PSAR reversal started. Then Stomo was showing you we were heading down. And then this thing broke. The CCI broke here on the 12th. And it ran all the way down here to this over done territory. So when you get to this oversold down in here, okay, now I'm looking to potentially take my profits. I don't care. I'm not waiting for the reversal. I'm just giving you guys some indication of what I'm looking at. So if I may want to sell puts on something, I might look for something that gets down to that 200 here. I'm going all the way back to June or July 19th. 200 breaking above. This is an opportunity for me to maybe sell a put on something. And had I done a put down around support here, we'd be in great shape. And for those of you that are in Income Navigator as well, you know that I like to wheel IWM. I don't like to even use the word wheel anymore. I just sell naked puts. I don't want to take assignment. I don't want to own that thing. I don't want to sell covered calls on it and cap my upside. I just want to sell the dang put. And if instead of getting assigned, I'll just roll it out and I'll just keep rolling for credit until I can't roll for a credit. And then I'll decide if I just want to tank it or not. But the opportunities to sell puts all year for a year in IWM was phenomenal. But you can see this PSAR reversal was happening up in here. So this was a good opportunity. It's a great place to sell a put. And that's all I'm looking at. If we would pick any stocks, I'll use an Amazon for an example. Let's take a quick look at Amazon. Amazon broke that downtrend, but look, look at Amazon here. Look at the indicators here, just telling you this thing's bouncing back and forth. PSR reversal. Could you sell a call or call spread up here? You sure can. I don't do that because I think it's insane, but you can do that. I just can't short and I can't sell call spreads. I have like some kind of block mentally on trying to go against stocks. However, it was a smart play and you can certainly do it. It's a way to make money on both sides of it. It's just a karma thing for me. I know that's weird, so it's all good. But you can see this PSR reversal as we start to go down in here. But you can see that we got way up to this 200 point, broke through that 100. You already had this, Stillman didn't really go from oversold here, but PSR reversed here. That was a great opportunity just to go short on this thing till around here, or sell your call spreads, buy a put, whatever. Perfect opportunity to do that. Make sure we mute everybody here. All right. And then Amazon. So back in here on Amazon and mid-December, you got that PSR reversal because look, that dot getting closer. It was right on it. And then it dropped. It was so any day here it could have reversed. It didn't. Then boom, the dot touches the top of the candle. The next day we get the reversal signal. And that reversal signal comes right in here. Now, if I was looking at my daily, when that reversal signal happened, somewhere in here, you can see we were getting long in the squeeze. Here, starting to reverse. You can see as soon as we start hitting more of these yellows, the momentum's reversing. We're getting back into the squeeze. The MACD started to reverse a bit as well. Now everything's been reversing on Amazon up to this point. So your TTM squeeze, RSI and stochastics not exactly on board, but they're a little short for me on Amazon. I'm not saying right now that we should be jumping in on Amazon, but look here. This was oversold. You could have gotten in, but really nothing's happening here. You're getting another PSR reversal signal here on Amazon. It doesn't look too hot to me, so I'm sticking away from it. Doesn't mean you can't go and sell some puts or something down in here. There's some support down here. That's all good. If that's something that floats your boat, it's awesome. But right now, Amazon to me is in no man's land. Anyway, I just want to give you an idea of how I'm using those different signals on it. And we'll pick an ARC. Well, I won't spend too much more time on this, but here's ARC, same thing. This thing's been a dog for quite a while. When you look at it, so it's had it's been in this channel for a bit, but as you ride these PSR reversals and these MOBO bands up and down, lots of opportunities to look at that thing. Here it hits the 200, breaks above the 100. You've already got the stochastic momentum on the rise. You had a PSR reversal here. This was a perfect time to get in. That was October 13th on ARC. If I look at the quick look at the super trend on October 13th, right here, you got a buy signal on a couple days before. So you got a buy signal. It was green, so that was a good check. And then here on October 13th, right in here, wow, coincidentally, MACD broke positive. RSI and stochastics on this day were both above, well, RSI was above 50, stochastics wasn't quite there yet. It took a day to get there. And then you had already had this reversal happening. I don't care that the squeeze fired or not. That didn't really mean anything, but that was a perfect opportunity. So when you add all three of these indicators together, to me, it gives you the best chance to be successful. That was the perfect spot to either buy, sell a put. In my case, I'd be selling a put. Taking a look at what's happening now, look at that MACD. It's just, to me, it's just all about momentum. Momentum's failing out. You're below a 200-day moving average as well. So I'm probably not trading something bullish anyway that's stacked like this. 200, 100, 50, 21 EMA, 8 EMA, all stacked to the downside. Why on earth you would trade ARK at this point is beyond me, except you're thinking, oh, can't go any lower, can it? Everybody thought that here. And then maybe you thought it here. And then maybe you thought it here. Yeah, it can go lower. And there's, I think, good opportunities. But look at the PSAR here. You're starting to get closer and closer to that candle. You're not there yet. You never, you know, you're coming off of the oversold. So you have some opportunities in here to take a look. I'm just staying out of it. All this does is this tells me don't be an idiot and try to pick a bottom on something like this. And we'll run through a couple other stocks with you, but the other thing I wanted to just jump in here real quick, I'm just going to pick coin just for the heck of it. And you can do the same thing using a weekly on these things. Now, coin doesn't have as much data as others, but as you're starting to take a look at the weeklies on this, I mean, there's a pretty defined trend line right there in purple that we continue to ride and run on. So that's a pretty defined trend line. This is an interesting area in here. So you start to take a look, see where we are. And since we're bouncing off this trend line, even though we may be coming back down, take a quick look. Where do things look? Would I want to buy or get in here? So for me, for my IRA, this is where I just bought a bunch of coin leaps. Okay, so I'm in out of the money leaps on coin here because we're bouncing off my trend line. This sell-off was fantastic. I loved it. 30% drop here. Now, am I trading this short term? You know, if I was to quiz you, would you buy this thing here or sell a put here? Well, maybe some of you are, but to me, despite the fact that we had this little PSAR reversal here, you're still below all your moving averages. Nothing, this was the extreme here. It broke positive here. So maybe, but I think unless you're below the, unless you're above that 50, I'm probably staying out short term for now. But anyway, so long story short, that gives you an idea of some of the different indicators. Let's take a quick look at where SPX is. This is the longer term uptrend line on SPX. Let's take a quick look at the weekly. So on the weeklies, you can see we really don't have a lot of touches until more recently, but there's your long-term uptrend line. You've got everything bullish running for you on it. Do I want to, things look pretty good SPX long-term, and as long as this trend line holds, everything's stacked. There's no reason to think SPX isn't going to continue to move higher. Now, does it move in a straight line? No, and come down and bounce off some of these other pieces. And if we come down and retest this, that's 46.21 or so in here. So if we come down and retest this area in here, 46.31, something like that. I mean, that's a 200-point dip. Certainly very doable in here to come down into this area on it, but you continue to move up and we continue to set new highs on it. This is a pretty bullish little move here too. So once you broke this resistance, you came up here, made this nice run, little consolidation, to the 8 EMA and bounced right off it and rock and roll. So could be a nice continuation move here on SPX. NASDAQ down today. It's got the same looking move. It's holding the 8. The 21 is more important to me on here. But if you start to look at this thing short term, I don't know, on SPX, and I won't spend much more time on this, you started to lose a little momentum in here. So momentum started to drop. Oh, sorry, this super trend actually completely changed to a sell 2 days yesterday. So actually, maybe it was 2 days ago, the 31st. But so super trend actually changed to a sell on there, which is interesting. And then the PSAR is not close to reversing yet, but it is oversold or overbought, potentially looking to head back down. So I think SPX looks okay, but it's showing some cracks in the armor. NASDAQ here, same type of setup, but it wasn't setting new highs on this move. And you're still a little ways away from this PSR reversal, so we could continue to come down in here anyway on it. But anyway, it looks a little sketchier to me. Super trend again on this one, little selling action, so that might be something to watch. And then here, this is the first crack in the armor of this little move, is this first blue bar today. And MACD was also foreshadowing a little bit of this. Are we running out of momentum on the NASDAQ? Now, I'm not saying it's going down to 15,000, okay? I'm just saying the momentum here is a little weak. Take a look at volume. All right, so let's rock and roll on to some other things that are much more exciting for you. Well, maybe bonds are not exciting, but take a look at bonds, and that's a picture of death right there. So this was a pretty ugly looking, doggone it. So there's your little uptrend line up here in bonds, but bonds have just continued to sell off. They're got pounded yesterday. They got pounded today. So bonds are down, which means rates are up, and rates are rocking up. And then NASDAQ's down, rates are up. Pretty easy to figure out what's going on there. Or how far can rates go? I don't know, but you're getting pretty doggone close to some of these highs on rates here. So you're getting pretty close to a 17 handle on the 10-year here. And squeeze is not done yet. So do we go a little bit higher? Maybe. It's not a great environment, I don't think, for big tech stocks. All right, so amateur analysis time over. You can agree, disagree, it's all good, but I want to just give you my takes on the markets. I don't like a lot of stuff here. You know that I'm a little bit gun shy on some of the things that we have. So let's take a look at our account and just show you what we're trading today. It's a kind of a mixed day in the account. And first thing we'll take a look at is, you know what, I'm gonna switch the screen share here to my full screen. So I know this was maybe a little confusing. We'll migrate. So hopefully you can see what I'm showing you here. So we are in this CL trade. So we're in crude with a strangle. I just want to run through that trade, why we made that trade on crude. So if we take a quick look at crude, I like to go out around 90 days-ish or so on these. This one was 100. I think, we put this on a couple of days ago. It was more than 100. That's a little far for me. I don't want to get too crazy out. So this was a good point to put this on at that particular point in time. And I will typically go out somewhere around that 6-7 delta, but at least 1.5 times the expected move on here. So with the expected move at around, according to Tastyworks, around 10. So the expected move here right now is 960. So you get a $10 expected move. So if you can get 15 away from that, that puts that around 60. I was able to go out a little bit farther, get some decent credit. And then same thing on the upside here, get decent credit. Crude is a future contract. So, and this is a big multiplier. So this is a 1,000 multiplier on these. So even a $1.23 credit that we got to put this trade on, on the upside, it's, 1,230 bucks. If you let it expire, we're only looking for 50% here. Typically on these normal strangles, I look for a 50% winner and a 2x loser, and I'm all good to go. We're up 18% on this in the last couple of days. It's all good. Doesn't chew up a ton of my capital, so I feel pretty good on that. So there's our trade on CL. And if we look at the chart on it, why would we have entered to begin with on CL? Well, take a look at this channel. I mean, I can stretch this back, mess up my stuff a bit, but let's see. mean, if we take a look at this back, there's been pretty good support on crude around 61 anyway. Here's the highs. We're exactly halfway between. You don't have any real strong consensus. And also, I wanted to see, okay, are we going to go back and test 85, which is okay because we sold the 95. So I'm okay with the 85 anyway. I'm way past setting new highs in crude on this one. So why would, it's halfway in my channel. Check, that's not bad. Where are we here? Well, you saw this on this run up. MACD started reversing 4 days ago, which means to me, the momentum is starting to drop out. Now, just because momentum drops out doesn't mean things don't keep drifting higher. It's just giving me the best opportunity. In here, squeeze had fired. It's getting longer. If this goes 8, on here, if we get to 8, of the green dots or so, that's about the end of normal squeezes. Again, doesn't mean they can't go longer like this one. Okay, that's a hell of a long one. But this is the average, so maybe we'll run out of some steam there. I'll check the, and I'll check in on here to see, hey, we're pretty overbought according to this, according to my stochastic momentum. That doesn't mean if we're overbought, we can't stay overbought for quite a bit of time. So that's all good. And you're making a nice little push up today here, but you're getting close to breaking above the 100. Doesn't mean it can't stay there, and it can stay there for, I don't know, a month potentially. But I think this gives me an opportunity that, hey, we might be a tad overdone. So if you're in the middle of that channel thinking that momentum might be slowing a bit and you're a tad overdone, it's a good opportunity to me to put on that strangle in CL. So hopefully that makes sense. That gives you a little of why CL. Let's skip BS for now. And gold, same type of thing. We have that strangle on as a 90 DTE strangle on this one. Right now we're up almost 30% on it. So we're getting close to the 50% strangle. We have 50 days left. I don't have the DTEs. We've been in it, but the original DTE, but in good shape. On gold, let's take a quick look. What's gold look like? Why would we do that? Look at this channel for gold. This has been a really good, now I'm not saying this is a perfect channel on gold at all here, but take a look at that and throw something up in here just for the heck of it. Okay. All right, so here's gold again. It's a good opportunity. It's been bouncing around in here. I think gold's going to have a good year this year, but I think near term we might be a little overdone on this last move. Look at this PSAR. It's getting closer and closer and closer to the candle. What normally happens when it hits that candle? It reverses and you go the other way. So again, I think gold's got a good year coming, but I'm not afraid of the upside on it. And here, I think some of the momentum's coming out of gold. It's a good update today. And gold hawks will be all over things. But I think this is a good opportunity. So we're going to stay right in the middle there, let that thing work. And yeah, here you get a nice 30% winner. It's all good. All right, let's take a look at CRM, which we put on a put trade, a naked put on CRM. It's getting wackadoodled today. So let's take a look. Again, that's a technical term, I guess, but let's take a look at CRM on here. So CRM's had this, in my opinion, really solid support line for quite a while that's getting a little tested today. So CRM's getting handed to it a bit today. The momentum reversed here. You broke positive here, which is where we wanted to get into this trade. Selling a put, below here. You were breaking out. Momentum was reversing here. When we took a look here, you also had PSAR reverse to positive here. You had this way oversold mark breaking through the 100. here, which is also a good sign. So everything here said, yeah, I think this thing could be an opportunity to sell a put. So that's why we sold that put in CRM. Now we did sell the 240 put. We're still up 32% on the trade. So it's still a winner. We're down today a bit, but we're still up 30% on this trade overall. But CRM getting cracked today with the some of the other tech stuff that's out there. When you take a look at, Amazon being down, Microsoft, so you got Amazon down 1.5% today. You got Tesla down almost 3% today. You've got Microsoft down. You've got Apple slightly down to flat. You've got Netflix down. Google's flat. Nvidia down. CRM down. AMD down. It's all a sea of red on the NASDAQ because of the rate issue today. So we're okay. We're down here. We still have a positive P&L on that trade. So nothing doing right now on that. I am in Ethereum. Here, I just let this thing percolate along. I add to it on down days, but no more than X% of my account. Now, Home Depot, I did like Home Depot. So I called this one out the other day on Home Depot. It got slammed yesterday. But let's see if we can, if we're getting some back here today. So here's Home Depot. To me, MACD was reversing and boom, wanting to go positive right here. You were bouncing, and you broke ahead of the 21 and 8 EMAs on it. You got the reversal here, potentially squeeze firing long today. Here, so everything was lined up. Yesterday was a bad day because of interest rate, home builders, all of those things were really affected. But look where it came down to yesterday. And hopefully you guys can see this stuff okay, but it came down, bounced off the 21. It held above the 8, bounced off the 21 EMA, and now we're moving higher today. Super trend, we're still green, and then PSAR, we had that PSAR reversal signal here. We're quite a ways away, so I think we have some opportunity to run. A little overdone on this one, but other than that, I'm pretty good on that. So I think you've got an opportunity here to run up. So we did a butterfly here, the typical way. And again, I'm just giving you a quick overview of how I, traded this one. I look at the expected move over that period of time. Now this thing has moved a bit since when we put it on, but I will usually go just to or inside the expected moves. The expected move on Home Depot, somewhere around 16, 17, I think it was almost 20 the other day when I put this on. Remember, we put this on before Home Depot moved up, down, back up. But I would look at the expected move. I like to typically go on butterflies 11, 12, 15 days. I'm not a long butterfly guy unless I think it's a long, slow move. I just thought this was a quick move. We got a pop potentially, and I like to go essentially 2 to 1 on the wings. So if my upper wing is 5, my lower wing's got to be 10. I want to spend half of that. So if my upper wing is 5 wide, I won't spend more than $2.50 for that trade normally. So I spent $1.83 here because I don't fear the upside because it don't matter. If this thing wants to go to 450, doesn't matter. My max here is going to be $5. I spent less than half of that. It's a 100% winner. Pretty good with a 100% winner on these. That's it. I'm not looking for 200. I'm not looking for 400. I'm not looking to pin anything. I don't give a crap about any of that. All I care is that I'm going to make 100% or I'm going to lose a little teeny amount of money here. And I only did one contract. I'm going to lose a whole $1.80. So $180 if this thing doesn't go. I hold it to the end for the most part, unless something just horrific happens and I can get out for some kind of pennies left on it, but you might as well let it run. Give yourself the option here. We're down a tad on the trade because yesterday was bad. We'll see what happens. I mean, you're only 9 points away from, and you got 17 days, and you're really, to get to here, you're only about 16, 17, 18 points away from heading up into here. We'll see what happens on Home Depot as that one plays out. IWM, I love selling puts. So we talked about this one already. We got those puts on. They're not ready to take off. IWM puts take a long time to come off, but these puts I put on around 30 days. I'll probably put another one on any kind of a pullback in IWM. So you're getting a little bit of a pull down, a sell here today. Let's see what happens. But it's about time to put another IWM on, and I try to keep one a week, one every 2 weeks, something like that. And I'll just let these things go for a while. So NEO, and those IWMs were up 77% on those. So, and then NEO, same thing. Love NEO. I think it's been overly, it's gotten too much to the upside, too much, people thinking it's going to go too high, and I think it goes too low as well. But I think this is a good potential double bottom in here. So I think on NEO, I think this is a good spot in here to look to do something. So those might be a double bottom on NEO, but you had the reversals happen here on TTM squeeze. So you had that reversal happening. You had MACD reversing. MACD pop positive on this big day here. That's a nice looking day. Yes, it's below the 200 and the 50. It's a little bit of a broken rule on this one. I just think that this is about as low as we go. So yep, sometimes rules are made to be broken. Look at this thing. It got all the way down to 350 on the CCI. As soon as that thing breaks the 100, I think it's a great opportunity. Stomo showed it. Same thing. This is breaking here. You got the PSAR reversal. Yeah, I get a 1 day in there. In here, pulling back a little bit today. I think this area here around 27 is pretty good. And we own the 25 put. We've got a 67% profit on NEO, so it's all good. You can go down a little bit more. I don't care. So Roblox is another one we did a put on in here. Now taking it on the chin today. Oops, I don't mean monitor. Let's go back to chart here. So Roblox here, we sold the 90.85 put spread. I didn't feel real comfortable on this thing, which is why I did a spread as opposed to a naked put on it. This one's a loser so far on Roblox. So it told you we were in a downtrend. It didn't break it. This is a good indication of, hey, you're watching and listening to other people's ideas, and there was nothing here that said go ahead and make a trade on this sucker except for this support line. I really felt this support line, and it still may hold today, so we'll see, but it's a bad day today. It's staying in this channel. If it would have broken that channel, I think we had a really great upside. So we took the risk. That's why I put the credit spread on instead of a naked put. If we lose it, we lose it, and it's all gone. Don't really care. All right, and then last thing here is Tesla. We threw this one on yesterday. So we threw a butterfly. It's the same thing. My upside wing is twice the size of my downside wing. I paid just a quarter of what the width was. I'm risking 282 bucks. I can lose that. It's all good. We are up a fraction, a whopping 4% on this trade right now in a day. So I'm all good with that for now. All right, let's jump into a couple last things to wrap up, and we'll hit some of the core trades. So from the standpoint of hedging, this is where the hedging really starts for me. Is I like to trade these 25-45 call spreads out there. I typically would like to spend less than $1.50, $1.80 to put these on VIX. If you're taking a look at the VIX, here, where's my VIX? No, sorry. So if you're taking a look at the VIX, you can see we stay in that range here. We usually are somewhere around 16. We get up to 25, 16, 25. It's got some reversal looking here on it. If you look at the PSAR, look at the, that reversal's been happening. We're not quite there yet, but we are way oversold on the VIX. So I think this is a good spot to be buying VIX. So if you want to hedge, I think this is your best bet to start to buy VIX, because I think this thing's going to turn a bit and start to move in your direction at some point. So I would be I would be wanting to add more VIX, which is what I did yesterday as well. So I continue to buy these spreads. You can finance these by selling a put spread as well. I just don't do it because I just don't want to risk, the put side. To me, a hedge is something you buy and you lose money on. And I buy it and I lose money on it. And you know what? I've lost $1,200 on all of these VIXs combined so far, which is fine. It doesn't mean anything to me. It's 1%, not even 1% of my account value. And that's all good. We're up for the year already. We were up a full percent yesterday. So we're doing totally fine. This is a good expense. I'll leave it on. If this thing rockets up to the 30, 35 range in here, where it was before, we'll sell those. We'll sell those VIX. We'll probably get somewhere in the neighborhood of, I don't know, $7, $8 for it. And we paid $1.50 to, $1.80, $2, something like that for it. So it's $6 times whatever amount of contracts you have, 5 contracts, make a couple grand, and that's going to offset some of my other losses in there. SPY, we've got a few unique pieces on in here. We've got a 111 trade in SPY. It's the last one to come off. And then we have 2 of these wrist twist or ratio spreads in here. And if you want to just take a quick look at what those look like, we'll do an analysis on one of them. We'll take the one we just put on and take a quick peek, see how that thing looks. Okay, and there you go. So this is what those are going to look like. It cost me a couple bucks. It cost me $135 to put this trade on. If we stay up in here, we're all good. If SPY starts to sink and goes hard down, we start to really, this is where the points really matter. So if we would, if you drop 40 points, it's not really going to do much. It's going to throw you in here. But you can see this T+0 line. It's pretty flat. Everybody gets worried about these little, this valley of death in here. Well, the valley of death only happens on expiration. It doesn't happen now. You can see how smooth that line is. So if we head down in here, this is actually going to start to make money in here. So as we go right around 420, boom, you can see the P&L theoretical there is positive. Now it's just positive as we go, and you start to make a couple grand, 2 grand, 3 grand. So I have a couple of these on. It's a bigger black swanish type thing, but if you get a nice little 5, 10, 15% pullback in here, this thing be pretty good. What are we at now? 478. 15% of that's what, 71. So 71 from 478, it's about 406. So, this is about where a 15% pullback would put us. You start to make a couple hundred, $600 or so on this trade. If it goes farther south, you make even more money. So that's where we are in some of the SPY trades. SPX, we're sitting here, we got about 8 minutes. We're sitting here with a 111 trade, and up here. So this is our 111 trade. Let's take a look at all of the things going on in SPY, which has got some interesting things here in SPX. Let's take a look at SPX. Boom. Take a look. All right, so this is a big ass bear trap, as we call it. So there are, when you're looking at this particular position, you've got a 41.95, 42.45 spread down here that you've got two contracts of, and that's a 50 wide. And then you've got a 25 wide up here, 46.15, 46.40. That makes the top of this iron condor. It's just an unbalanced iron condor, 25 wide here, 50 wide here, because you got this big area here. So 50 wide, 25 wide, and double the number of contracts here. That allows us to put it on for just a slight credit. I can make a whole 55 bucks if this thing stays up in here. But I got paid to put on a hedge that if we drop, down into here, and we talked about dropping to what, what are we at, 479? I mean, if we drop 10%, that's like 500 bucks from here. Puts us right into here. So a 10% drop puts us right in here. We're standing to make, a little over $2,000, 2,500 on this particular trade. Look at that T+0 line though, because this thing's been on for a while. If we even drop 5% on here, which maybe 200-300 points, and we hit down into here, this thing's already worth 1,000, 1,300 bucks on a 5% drop. So these are great. Love these trades. It's a fantastic hedge, in my opinion. Choose up some buying power. So this takes some buying power to put these on, but the nice little hedge trade, and you get paid to put on a hedge. All right, so let's take a look at two other things that we have going on in here right now. This is another hedge. So man, I'm hedging like crazy, right? You got a VIX hedge. You got the wrist twist spreads, or those SPY spreads on. You've got that that big ass bear trap that we just showed you, and now what? You got a credit spread, an in the money credit spread. Let's show you how it looks. Okay, so here is an in the money. I think I picked the wrong one. Let's try this again. I think this is the right one. These puts, let's take a quick look. This is what I want here. I don't know why I was selecting the wrong things. All right, February 18th, that's what we're looking at. So let's look at the February 18th trades that we have on in here. Okay, so this is it. Essentially what I did was I sold a in the money call spread. So this is a 10 wide. I sold this for $2. Or sorry, for $8. So I sold this for $8, which means if we stay above here, okay, I'm going to lose that 200 bucks because I sold it for 800. Okay, but if we stay above that line, we're going to lose, end up losing 200 on it. So it cost me basically $200 to have this hedge on, but I make 800 bucks if we drop anywhere below 44, 50 or so. So 44.50 from here is what? 44.50, 47.90. It's 340 divided by the 47.95. So it's a 7% drop. So we drop 7%. I make 800 bucks on one of these. I got a couple of these on. So it's another little hedge, cheap hedge, 200 bucks to make 800. You lose 200 bucks. I lose 200 bucks. But Tom, you're using all of these, hedges, and it's costing you money, and it's a drag. Yes, it's a drag on my portfolio. Instead of making 63% last year, I would have made 100% last year if I didn't have hedges on. Okay, I'll suffer with 60% gain. And I will spend money. I spend money on a hedge. It's all good. All right, wrapping up here. Last couple things. Yes, we do our daily MES trades, but we changed that after the first of the year. I moved up to ES just because this account has gotten larger. But every day I'm taking one off. So what I'm going to do today is I'm going to look at what's the most profitable one you have on. Well, it's this one right here. Okay, this one's at a 93% premium capture. So we're going to close this sucker right now. We'll put in an order to close. We'll just see what happens. I'll let the thing work. I might have to walk it up a bit. So 215, that's probably not going to get filled at that anyway. We'll go to 210. All right, so we'll put it in here and we'll just let it work and we'll see what happens. So I'm going to close the most profitable each day. This one's at 93%. I mean, this one's at 93.3. I guess I could have done that one too, but it's all good. I'm not going to quibble over 0.5% on MES. And then I also want to put on a daily ES trade. Now there's a lot of ES trades in here, but I'm going to put on a daily ES trade. We want to go 60 days out without going over. That takes me to the 55. On these, I'm getting around 13.5. So I'm somewhere around this 6%. I like this one. It looks nice. So we're going to go here and look to sell the 40-50 out. But I'm only doing these on Mondays and Thursdays because I'm being smart about buying power usage and notional value here. Right, so I am not placing that trade today. I just wanted to show you how I'm working it, but that's how these get put on. Because of the size of ES being a 50 multiplier versus a 5 multiplier, these are 10 times bigger than MES. And then while I was doing 2 MES at a time, okay, these are significantly, this is, 5 times bigger than that. So it's going to use 5 times the buying power, 5 times the notional. It's just putting me too much in danger to put big daily trades on. So I'm not doing dailies on those, but you get the point of what's happening in there. I think we're at 11 o'clock. I know we haven't covered a lot of potentially new stocks or anything else, but hopefully this is a good explanation of what we have on. I do want to hit these strangles real quick. So let's take a quick look at the strangles that we have on in here. So the first strangle is a 3,500 5140 strangle. I put this strangle on back in December. I do these at 90 days. So this is a 90-day strangle. And I usually keep about 3 of these on. So you get a 90-day strangle. So you can see I took in somewhere around 30, I think it was, let's say $33 even. So $33 even, I'm going to look for a 50% profit. We're at 18.25 today, so I'm not there yet. So I'm at a 45% profit on it right now. So I'm sitting at 45% on that particular one, and then I have another one on. That was one. 35.50, 5,200 is the other one I put on. This one I put on for $27, and it's worth 15.25 right now. So at 15.25, it's at 44%. So I'm not there yet. I'm close on 2 of these. I will want to put on another one of these strangles around 90. I mean, we're right at this 90-day mark. I'm going to go out. Let's take a look and see. Let's go to about a 6 delta on the put, and let's go up to somewhere around a 7.67 delta up here and get $29 for this thing. So $29, I'm well outside the expected move of $293, $300 expected move on this trade, $29.50. Now, the key for me though is, are these, is the expiration different than these expirations? These are expiring March 18th. Yes, this is a March 31st. So the expiration is different. So that's important. The other thing is, are my strikes at least 50 strikes different than something I already have on? when I'm looking at this thing. So this is a 38.50, 52.20. The puts are quite a bit different. The calls slightly different. So to me, it's probably good enough. In here, it's a different expiration, enough different on the strike, 38.50 on the downside, which is much higher than these on it. So this might be a good opportunity to put that trade on. We'll send it and we'll just let that thing bake in there. So you can see that's an idea of how I put these strangles on. You can do them in MES, you can do them in SPX, you can do them in SPY. If you have PM account, you can do bigger. All of those things are all good. You can see the buying power on this thing is going to be around $4,000. And my profit on this is going to be about 50%. So I'm hoping $700 I'll make on this thing. And we'll let that thing cook along. There's also a bunch of these big black swan hedge type trades on here. I've got five I've got 5 puts here that I had bought for $1.90. I actually bought them for free because I sold 3 puts for the same amount of money that I bought these 5 longs for. They're almost worthless, which is fine. It's a free hedge. Here you can see I sold these 3 of these for $3.65. Then once the 50 strike lower for 5 of those was the same amount of money that I spent on these, I added those on. I'll take this off at 20 cents. So I'm at 40 cents. So that's still on right now, but we're getting close to removing those shorts and being left with just those longs. Then down here, same thing. I've got another set on here. This one's got a ways to go, but once that comes off, then I'll have 3 on. And then I started even one more here on the on the shorts. Haven't had, we're not ready to buy the 5 longs that go with it yet. This has to be, around $2 or less to even check the account. So that's where you are. But if you take a look, where are you on all the ES stuff that that you have on here? Oops, I didn't do that. Okay. And take a look at the analysis of all the ES trades. When you add them all up, this is what it looks like. I can't even fit it on this screen right now, but that's what that's what your blob looks like. Here's where you are now. Okay, we're just sitting in here chilling, and we're enjoying the ride. We can go all the way up here to about 52.20, or what is it, 52.60 and change, and still make a couple grand. We can go all, and the farther we drop, the more money we make. And this is just on the ES trades that we have. So we drop down in here. It's a pretty good cushion to drop almost 800 points, almost 20%. So it'll take me a 20% drop in the market to start to even look at this loss. But what do you think is going to happen when you get down here? Okay, all of those hedges are going to be kicking in fantastic, which is going to offset this on the overall portfolio. If you just drop in here, you're starting to make 10 grand, 12 grand, not bad. You could just do this alone and survive. So anyway, there you go. There's a quick overview of the account, trades, things that I have cooking on, a little bit of how I use some of the different trades and indicators. I don't like the way stuff looks. I keep saying it. I'm going to keep saying it. I can be wrong. I'm making money while I'm wrong. But does that look good to you on Facebook? Okay, I'm going to wrap up in 2 minutes here. But does that look good? All the momentum coming out. You're breaking below the 21. You're breaking below the 200 on Facebook. That don't look good. Amazon, you're breaking below the 200. Momentum is not looking too good here. You can't even break the 50. You can't break the 21 EMA. Does Amazon look good to you? Okay. Tesla is the only thing looking good out of those right now. This is fine. If you didn't get in yesterday, this is your chance on it if you think it's going up. Microsoft, it's not battling its 200, but it is breaking the 50, the 21, and the 8 today. And does this look good? Okay, Apple does look good. Okay, so Apple's up here. Momentum has been just coming out of it, but it's still been moving up against that momentum. But look at where RSI was here on this high, and look where RSI is on the new high, significantly lower. That's not good. Okay, just my opinion, that ain't good. Netflix, that ain't good. Google, that's not too great. Okay, NVIDIA, maybe that doesn't look too good. Okay, CRM, which unfortunately we're in, may not be great. AMD, that doesn't look too good. Okay, you're still way above here. You're pulling back, but are you getting long here? No. So if you ain't getting long, what are you getting? Okay. Adobe, I think Adobe, this is a good potential opportunity, but that ain't looking good. Arc, that ain't looking good. Teladoc, that ain't looking good. Roku, that ain't looking good. And here's the 200, and it's completely stacked to the downside. Zoom, that ain't looking good. You, that ain't looking good. And I like you as a metaverse play, Unity, but it ain't looking good. Spot, that ain't looking good. Twilio, that ain't looking good. Shop, that really ain't looking good. DraftKings, that's kind of looking interesting. Okay, completely stacked to the downside. Everything in your body is telling you that this, I think I can buy the bottom here. I think I can buy the bottom here. Look at the chart and determine for yourself that that ain't looking good, even though I like it. That ain't looking good. Alta, that looks good. Alta is one of the best looking charts out there. Home Depot, that looks good. So Alta and Home Depot, those look great. Costco, that looks good. Momentum might be coming out. Walmart, doesn't do much for me. Okay, Target, maybe it can get to its 200-day moving average. Then what could happen? I don't know. Disney, everybody's all geeked on Disney for whatever reason. Does that look good to you? Below the 200, the 100 below the 200, the 50 below the 100. Now it is breaking the 50, kind of, but momentum's coming out. I don't know. That ain't looking good. Boeing, interesting. Anyway, I just ran through a ton of stocks. I can go through more in here. This is for me on the watch list. If it ain't on here, I am not trading it because if I don't know it, I don't trade it. I don't even trade most of these things. If you guys looked at my portfolio anyway, what do you think I trade? SPX, SPY, MES, ES, and a couple other futures. And other than that, you can get by on trading SPX and make a living on that and never have to go back. I do like this potentially though. Okay, above the 200, momentum could be reversing. This pullback today to the 8. This is interesting. Okay, that could be something. You got a PSAR reversal yesterday. Super trend green. It's the buy. So that thing actually doesn't look bad. So Airbnb. So there's a couple things to take a look at. Anyway, folks, that's it for today. I know that was a little bit long. I hope that was helpful. It covered a lot of different types of trades, a lot of different trade styles, and a little bit of the insight of me and some craziness here. Any guide on settings and indicators? I mean, most of my stuff's off the shelf. There's very few custom crazy stuff. But I can throw some stuff together if you want. I mean, Anya's got the great charts. He's got all the cool tools, man, and create good stuff. I'm the simple dude, and it's all about, to me, it's all about moving averages, MACD, and then a couple other unique things in there. And maybe I'll look at a Ichimoku Cloud or something like that on something. What did we think was looking good? Was there a stock that looked good? It was Home Depot and Ulta. I mean, when it breaks that cloud, this thing told you here, buy, 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 buy. Okay, Home Depot, that stayed above the cloud. Okay, but that looks good. So I'll try to share some of these things, but most of these things are right off the shelf and toss. That PSAR, right off the shelf and toss. The stochastic momentum right off the shelf in TOS. I don't think I've altered much of anything. The CCI indicator right off the shelf in TOS. A little modification. I went to the 30. I think it comes out of the box in TOS at 20. I wanted the 30 period, but super trend. This is not out of the box for TOS, but you can go and pull it off the internet. Mobius has a version. I can also share this one with you. This one's tweaked a bit, so it doesn't look like anything else that you'll see out there. This one's a little tweaked by me. I'm not a genius on these things, but I can share that with you. But yeah, William, I can try to put some things together if you want these things, but for the most part, I'm a really simple, if somebody designed it and it's off the shelf, then it must be okay. Now you can tweak it for your style of trading, like the RSI. Some people like the 14. I like the 7. Any of those cool things. And then from a watch list standpoint, let's go one more minute. I like the MOBO breakout in the 2-hour time frame. So that gives me something that, hey, that just stuff to watch. Is this something interesting? Maybe. Nothing really exciting there. Stomo oversold. What's oversold on that Stomo? Look at the stochastic momentum. I created my own little scan watch list, but look at that thing. Look how oversold that sucker is and pointing directly up here. That's interesting. Bouncing right off the 200 here. Now the PSR reversal hasn't happened yet. Super trend just turned green today. MACD reversing. Squeeze. Look at that. That's getting close to its 8 days. This could be an interesting spot for Oracle. What would you do here? Well, maybe you would look at the, first I would draw some support, maybe 85 support. I could sell a put below that. That's not a bad idea. If these things really start to gather some steam above these moving averages, then, and things that I think are going to rocket, I do butterflies. Things that are bouncing off support or something like this would be a put. Anything else? Yeah, you can look at whatever's in the daily squeeze. Marvel Technologies, I don't like it, but it's in a squeeze right now. But it's not a squeeze that you like because all the momentum has come out. So if this thing fires, which direction you think it's going to fire? Don't look good. To me, you can look at a few other things in here on it. And then I look at anything that squeeze may have already fired. Bank of America today, kaboom. Chevron, that's a great looking chart right there. That's something to buy. So I think Chevron's something that's interesting. Now, is it exciting for most of you? Probably not. It's not Tesla, Amazon, so you probably wouldn't trade it, but it's a good looking trade. Look at JP Morgan go. Look at Kroger in here. Kroger's looking good. Morgan Stanley's looking good. PNC, oh, these are all banks. Banks look good. Where are the banks? XLF. Maybe I should be trading XLF instead. And take a look at these. And then lastly, I have this PSR bullish reversal scan. So it finds me everything that's reversing on a PSR reversal. So boom, today, this Baxter potential today, PSR reversal. That looks like might be an opportunity. Deer as well. I think Deer is also really interesting. I think, oh man, well, maybe not now. Deer was telling you yes, 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 and then today you missed it. Can we still go to here? Sure. Yeah, sorry, I digressed and I went long again on these things, but a couple little scans, a couple of things. We'll share some more with you guys. Just stay simple. Don't get carried away. You don't have to trade every day, and you can trade a totally mechanical strategy here and be totally fine for the year. That strangle still cooking. Hasn't bit. Maybe we'll see if it gets bit. But we'll let the thing run for a bit. Other than that, everybody have a fantastic rest of your day, and we'll talk to you later. See you in Slack. Bye-bye.